The following is a presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 21st terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. Hope everybody out there had a great weekend, maybe an extended holiday weekend. A little time to refresh yourself. Welcome back. Let's go check out these markets after we take a look at one of our tools. This is the tool I call, it's all about thanks living. You know, folks, thanks living centers on things to give thanks for. And more importantly, a grateful mind is a mind that will attract itself to great things. In fact, it's our attitude of gratitude that opens the door to abundance in our life. And thanks living, well, if lived on a continuous basis, it'll create more good in our life than anything else that we can possibly do. Because thanks living is a way of life. And it's a way of life no matter what our circumstances are, no matter what challenges that you and I may face. You see, perhaps the most difficult, yet the most powerful of all, is to give thanks for our problems, for our obstacles, for all of our challenges. You see, the reason is this. As we face our situations and overcome them, and yes, we will overcome them, we become stronger, we become wiser, and we become more compassionate. You know, the fastest way to learn something, if you're trying to teach somebody something, the fastest way to learn something is to link the known to the unknown. For example, we learn mathematics by solving problems. We prepare for an athletic event by practicing against a stronger opponent. As a young child, young kid, I used to play chess against my grandfather. Have you ever played a game of chess? Who would you learn more from, a stronger or a weaker opponent? Exactly, a stronger opponent. And we can learn, folks, we can learn more from a larger problem. A larger problem. Be thankful and be grateful if you've got problems in your life. I can still remember the day I beat my grandfather, and he was not the type to just let me win, because in the end, really what he was doing was he was preparing me to get stronger, and that's what all problems do for us. Yes, folks, be grateful for problems. You know, there's an ancient proverb. It says this, says a donkey may carry a heavy load of gold on its back and never know its preciousness, only its weight. I guarantee you this, sometimes we feel the weight of our circumstances, our problems, and we lose sight of the precious nature of the many gifts that we carry in life. Adversity, when overcome, strengthens us, and therefore we are giving thanks, not for the problem itself, but for the strength and the knowledge that will result from the experiences that, guess what, we are about to have. Yes, giving thanks ahead of time, folks, what that will do is that'll help us grow. We'll get stronger, and we will overcome every challenge that we face. Thanks living. It's really what it's all about. So let's go see what we can be thankful for in these markets here. Futures, they're on the rise this morning. Let's go see what that really means. You've got the Dow futures up 86 points. They're trading out at 16,483, up about 0.5%. S&P futures up 8.5 points. They're trading at 1842.50. NASDAQ futures up about 21 points, trading out at 36.05. King dollar back about 2 pennies. It's trading at about 81.34. Goldilocks back $14 right now. It's trading at 12.37. Silver off 53 cents, about 2.5% to the downside, trading out at 19.76. Light sweet crude, that's on the rise. It's up 76 cents. It's trading out at 95.13. A quick peek around the globe. Let's see what we've got going on out here over in Europa. The DAX is up 67 points. It's trading out at 97.82. The one to watch, though, it is the FTSE. The FTSE trying to take out that 2007 area. It's trading up 25 points. It's trading at 68.62. Remind me to make sure that we take a look at that FTSE chart. It's one we're going to want to certainly pay attention to. Over in Asia last night, it was green arrows across the board. You had the Nikkei up 154 points. The Hang Seng up 104. The Shanghai up 17 points. Again, our call number is 877-927-6648. Give me a call. Happy to take a look at your stock chart, answer your question, do anything I can to assist you. Let's pick up where we left off on Friday. Friday, we were showing the NASDAQ futures. If you're watching us on TigerTV, I've got the 30-minute contract, 30-minute chart up on my screen out here. If you're just listening on the radio, your mobile device at TFNN.mobi, let me describe to you what we're looking at on this 30-minute chart here. What we noticed that the NASDAQ futures were traveling. I'll get that word out. Traveling in a sideways consolidation box. The bottom of that consolidation really being about the level of 35, we'll call it 35.91 at the downside. The upside here, the top of the consolidation, about 36.09. That was a consolidation range. As we were coming into the 10 o'clock time frame, we saw that area was under pressure. On Friday, I only do the 9 to 10 o'clock show. I said, hey, if that area doesn't hold, it can't bust it down. It'll try to bust it up. Well, it didn't bust it up on that session. All that it really did was it made a retracement. Made just a little bit above the .618 retracement. Well, I actually got to the .786 retracement, 36.03, and a bit of change out there. And then it did give loose. It gave loose. It closed below the that level about 2:30 in the afternoon. It made its measured move. The measured move of any consolidation is the consolidation pattern itself. We see that, in fact, it did that coming into the 4 p.m. close on Friday. Bounced a little bit off of that. So it completed that move. As we saw here, futures traded a bit yesterday, came back online last night. As they came back online last night, we saw the NASDAQ futures get right back into the consolidation box. Pence, what it's done so far, it's gone up and it's tested the high. The top of that consolidation is still in place out here. Top of that consolidation being the 36.0875. We saw that level get hit at 12:30, sometime during the 12:30 session last evening or this morning, early this morning, however it is that you want to take a look at it out there. I suppose early this morning would be the proper way to take a look at it. So we've got the NASDAQ futures trading out at 36.06. Does this mean if there's a breakout, that the consolidation move to the upside could take place? Yeah. In fact, I would actually say the consolidation at this stage here could actually be a bit larger. What I mean by that is because we could go ahead. You can easily make the case here now. If we take a look at the consolidation pattern, we can go from the top of the old consolidation, still the existing consolidation, and now you come down to the lows that were put in here when we came into that 4 o'clock session. So that could be one of the two areas if, in fact, we see a break above this consolidation level. What we can pay attention to here, this is where the danger sign comes in. If you take a look at the move higher last night, coming into it early this morning, 12:30, as the NASDAQ futures got up to a price point of 36.0875, they did it with a relative strength index, 14 period, at about the 78.51. That's in the extreme overbought condition. You can see right now that we're moving higher. We're moving up in that area with what? With less relative strength. That says that a move that moves above this consolidation pattern, does it on less relative strength, shows the first sign of a bearish reversal signal. That's not a pretty picture out there. That is a danger sign. So we got to take this thing one day at a time, the one moment at a time, the 1/2 hour, the 130-minute session at a time is really what it is that we're looking at here. But if we do see a consolidation breakout from here, probably before that RSI price divergent pattern sets in here, we're probably looking at a price point of around the 36.25 level. That would be about another 25 points higher. That would be the small consolidation pattern, but it could be the larger one. And if we try to take a look at that larger pattern that is out here, and let me just try to move that because it's a measured move, that would take us up to about the 36.44 level. But one thing at a time so far, right now, all that's taken place, all the hoopla that is out there, when we take a look at the NASDAQ futures, the NASDAQ futures have been the strong dog out here. All that they've really done thus far is just traded up towards the top of the consolidation box, which has acted as a resistance point. If we take a look at the Dow, let's go take a look at the Dow futures. Now, the Dow futures here, they have not been able to break above the actual gap down that occurred on January 2nd. It's already January 21st. So the top of the gap from January 2nd, that was at a price level of 16,482. No, I take that back. Let me get you the right number out here. Let me get you the right number. Where is it? Right here. It's 16,495. Knew that didn't look right. 16,495. You're trading at 16,487 right now. That's been an area that has acted as resistance. Now, you may recall that was the consolidation pattern way back when. When I say way back when, I'm talking about the time frame of about January 13th, so a little over a week ago. That was that 160-point move, and as soon as it broke its consolidation, it went ahead and very quickly went ahead and made that move down to the bottom. That price projection was 16,176. I was wrong on that. It actually got down to 16,179. It was off by $3. Can you believe that? So that was how, the quickest way to learn something is to link the known to the unknown. Well, now we're taking a look at patterns here. We're taking a look at consolidations. It's why you want to be able to spot consolidating patterns as early as you can, especially if you're trading based on some type of momentum system that is out there. And most systems are momentum-based. You want to understand where the consolidations are because you can get jostled around quite a bit out here. Now, we'll see if, in fact, the Dow futures can break above that consolidation level. Look, if the NASDAQ futures start breaking above its consolidation and they start doing it with more relative strength, and we see the Dow futures break above its old consolidation, what that at least says is that it'll go test the highs from December 31st, something it has not done. That's up in about the 16,530-ish type level out here from December 31st. Hey, even more important than that, if it can break above that level, we'll likely see the Dow trade up to about 16,635. But one thing at a time. So far right now inside the Dow, the move higher is on the less relative strength. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It is better when we're together. Welcome back, folks. Question that probably somebody had on their mind out there. The question had to be, well, Steve-O, how is it that you could pick out the price here inside the Dow futures up at the 16,635 level? Because I don't think I got to it. Well, really pretty simple out here. If, in fact, the Dow futures are able to get up above, number one, the first level of resistance, it's a tested area of resistance. That's that gap down from January 2nd. Well, then at that stage, it ought to go up and at least test the swing point high, make a 100% move of a move. That's getting back to the December 31st level. If, in fact, it can take that level out, then what it would form at that 16,635, that's actually a 1.272 Fibonacci expansion of a set of swing points. That set of swing points being the December 31st high all the way down to that consolidation low break. That was down at that 16,179 level. If you just take the difference between those two, mathematically multiply it times 1.272, add it to that low of 16,179. What you'll get is a price projection somewhere right around that 16,635 level. It's as easy as solving a problem. It's as easy as math out here. So we'll be paying attention to any breaks inside of these patterns out here inside of the 30-minute charts, because they're just simply going to give us a pretty good indication as to what the market is going to do. The S&P futures, they're up against resistance as well, 1843.25. Right now, they're trading out at 1842.50 out here, so that's the resistance area. The Euro, Japanese yen, somebody had to be saying, hey, Steve-O, what's going on with your favorite currency pair out there? Why is it our favorite? Well, it's our favorite because it does a great job, the best job, of tracking the U.S. stock markets out here. As we take a look at this currency pair, it's not exactly having the same kind of party that our futures are having out here, although it could be forming an A to B equals C to F. What it has done here, if you were listening in our last show, we gave you a target area for the Euro Japanese yen. It actually hit that target area at about 1 o'clock on Friday in the afternoon. Happened to form a little butterfly pattern out here, getting us down into the 141-ish level. Went ahead and decided to make a lower move out here. It did this here on Sunday. Yeah, it did it on, but yes, Sunday and Monday. And what it did was it moved down. It went ahead and completed a 1 to 1.618, A to B equals CD down. And then it created your favorite candle and mine, and that was the hammer candle. That's where the bulls run in. That session took place here at 20:30 hours. That's 8:30 in the evening on January 19th out there. That's what set up the mark of the low. It also did that on a price relative strength divergent pattern out here. So you had a beautiful set of patterns inside of the Euro Japanese yen. Now the question is, and what it's done so far, if you go from the swing point high, that's the high out here at about 11 o'clock in the evening on January 15th. That's out at 142.89, down to the low of the hammer candle. That hammer candle coming in at 8:30 in the evening on January 19th. That price level being 140.309 out there. Go from the high to the low. The 0.618 retracement is 141.90. We have seen, in essence, the 0.618 retracement made 3 o'clock here this morning, and that was at a level of about 141.84. So close enough. You had a little doji candle, a little bearish engulfing evening star. So that says we've got some fairly stiff resistance right up here at the 141.85 level. If these markets are going to move higher, we're going to see the Euro-Japanese yen actually take that pattern out as well or get above that. And I can see that potential just simply because the A to B equals CD pattern that it has formed but has not yet complete out here. So if it can get above 141.90, that'll fuel up the Euro-Japanese yen to take on about the 142.34-ish level out here. Now, as long as we're in the currency area, let's go take a look at currencies out here. Let's look at the Queen, see what the Queen has done. The Queen Mum, the Euro, U.S. dollar. This is the weekly chart if you're watching us on Tiger TV. You know we've been following, in essence, two trends out here, both a descending price channel. That's the one that takes us back into the 2008 time frame. That has acted as significant resistance as well. We've seen a rising price channel, so that's what's creating this little vortex here. I know they talk about the polar vortex. Well, I guess there's a polar vortex in the Euro, U.S. dollar, and it's at the bottom of that vortex. That should mean that things are going to warm up just a bit. I hope they're going to warm up, at least here in Florida. I do not like it when the weather gets below 70 degrees. Then you got to start putting on the heat. I don't like the heat. In any event, out here, we see the Euro, U.S. dollar. It has moved down to the bottom of that rising price channel. To me, this is a tough currency pair right now to trade because it's really trading in a very narrow range. Dow futures up 87, S&P futures trading out at 1843, running right into potential resistance. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow trading up 48 points, trade out at 16,507. S&P up 10 points, trade at 1848.70. Composite up 27 points, trade out at 42.24. Russell 2000 up 8 points. It's trading out at 11.76. Apple up $3 and change. Microsoft up 34 cents. Google up $8. Cisco up 20 pennies. Lead the charge to the upside. It is Google trading out at 11.59. Baidu just behind, trading up $4. Apple up 3. Illumina Inc. ILMN. Can't recall. Did they have a pretty bad session last week on Friday? Maybe we'll check in on that stock right now. It's trading up $3.60. Tesla Motors up $2.84. This buds for you. Anheuser-Busch up $2.90. Dow Chemical up $3.30. Amazon up $3.60. Cenacorp up lost it, $2.60. To the downside here, CEO is the ticker symbol. Sanook, CNOOC Limited, down 5% off $9 and change. Expedia, EXPE, its ticker symbol off 4%, down about $3. 3D Systems down $2. Fiery, FEYE, off 3%, down $2.50. Travelers, I believe they were out with numbers here before the bell. They produced net income of $988 million versus $304 million from the prior year. Boy, that's a nice jump. That's a threefold increase. Their revenues, $6.7 billion versus $6.48. They must have guided lower out here because the market is not digging Travelers. TRV is a ticker symbol, down, not that bad. I don't know if it's with volume, but down about $2 or 2% out here. Rio Tinto off $2.89. Again, our call number 877-927-6648. Let's go check in on Goldilocks and Hi-Ho Silver. Let's go see what we've got going on out here. If we take a look at gold, this is a weekly chart here for gold. Beautiful chart. Well, I think it's a beauty because what it shows here, it certainly shows that descending price channel. That's a descending price channel really taking us back into the highs of October of 2012 out here. The top of that descending price channel, what we can see here is that gold hit the top of it this week. It's an area where you would expect to see a little bit of give, a little bit of takey. In this case here, it's a little bit of takey away as you've got gold trading out at $12.38 right now. Volume so far today, 140,000 contracts. Well, that's the weekly chart that we're taking a look at. So, of course, so we won't pay attention to the weekly volume out here. Right now, what I can say is this. What gold is doing is really kind of a normal thing here. It's actually giving you what I would believe might be an opportunity. This would be giving you an opportunity. The question is, where is gold going to pull back to? So for that, we really need to be taking a look at maybe some intraday patterns out here. Let me see if I've got the 30-minute chart out here. It looks like I do. We're trading at 1238.40. Let's go see what kind of pattern it is that we can find out here inside of Goldilocks. First thing that shows up on my radar screen is just this little bit of a consolidation. It's trading back into the swing point here that was formed at 9:30 in the morning. This was on January 15th, so last week, whichever day the 15th was that Wednesday maybe? I think it might have been Wednesday out there. So at 9 o'clock, 9:30 in the morning, we were down at a price level of 1233.50 with about 5,400 contracts. Came down there right now and tested on the last bar with about 6,890 contracts. Not a big deal out here. Looks like a little bit of a consolidation pattern out here. If it can close below this swing point now, we got to take a look at some retracement levels out here. Again, it's a 30-minute contract that we are, a 30-minute chart that we're looking at on my screen. If we go from the last major swing point low on that 30-minute chart, that would take us down to the 1184.80 range. Let's go from that low to the high that we saw that came in here at about 1:30 in the morning. This was yesterday. That was up at a price level of 1257.20. What we can see here is the dead cat bounce. The .382 retracement has not yet been made out here. And if we take a look at that, that would take it to 1228.20 or 1238.30 out here. No A to B equals CD down pattern if you'd really have to stretch to find an A to B equals CD down pattern inside of gold right now. This would probably be the one that you would take a look at. But there's such a shallow retracement there, I'd really hesitate to even call that a to B equals CD down. But thus far, what you can't see here on the 30-minute chart, it's gotten down into the extreme over sold level here. Seeing a little bit of a bearish, bullish engulfing candle form here on this 30-minute chart. So, where's Goldilocks going to pull back to? I don't know. I don't have a pattern out here is what I should say, other than this little consolidating pattern that it's trading down into. But the weekly chart shows why why gold is doing what it is doing out here. And I think really gold and silver really set up more of a buying opportunity than the move is over kind of a opportunity out here. If we take a look at silver on a daily basis, now silver hasn't had a huge move out here. It's gotten up to it's right now trading out at 1978. Really been traveling in a little sideways consolidation ever since about the time frame of November 25th. So if we take a look at that, let's pull this up on the screen here. Let's go ahead and draw the consolidation box. We'll put that at a price level. We'll start at about right here, and we'll take that down to the lows. We'll use this area right here as the low. So here, in essence, is our consolidation box, roughly speaking. That would be from a price level of 2048. Somebody out there do the math for me, would you? 2048 versus, I would say, 1911. 1911 versus 2048. What is that? It's $2.30 out there. Thanks for doing the math. So about a $2.30 consolidation move out here. That's what we would expect, somewhere right around $2.30. I think if I did my math right. If not, somebody out there, they'll be knocking on my head. They'll be saying, hey, you miscalculated. So you got about a $2.30 move inside of silver. Hey, a nice little buy would be coming right down to the bottom of that consolidation range if it can get down there, and that's right around the $19.10 area, and that is on silver. Don't know if it'll make it back there, but there's your consolidation range inside of silver. Says the next break of that consolidation should be equal to or greater than $2.30. So let's take a look at light sweet crude. Let's go see what it is doing out here. Really just traveling up to the .382 retracement, so nothing significant here, with the exception of, looks like a continuation pattern. Looks like a rising 3 candle formation to you. How about to you? What's it look like to you? Does it look like a rising 3 out there? Rising 3 patterns, great patterns out here. If you take a look at it, if you take a look at the move here on January 15th, let me just update this chart. Make sure that we're dealing with current and active data. Would hate to mislead anyone, because that's just simply, I'm a leader, not a misleader out here. And so if we take a look at it, yeah, it is a rising 3 pattern. Now, if you take a look at that little nice upthrust here on January 15th, the high of which is 94.64. Now, it's really the body, which is the essence of price out here. The extremes of any candle, those are the wicks, those are the shadows that we are taking a look at here. And so if you really take a look at the body of the candle, the close of, or the open, the close of the body of January 15th, $94.30. Then we had 2 small little candles out here, high wave-ish, high wave type candles, not dojis out here. But what is most important is, quite frankly, the fact that you had 2 of these little small bodies, 2 small-bodied candles traveling within the body of this. Now what we're seeing here thus far is a close above both the emotional high of the wick as well as the body of the candle. That's a rising 3. That's a continuation pattern. What does that say? Well, you know what it says to me? Says to me that we ought to see light sweet crude move up to about $97.12. So if you got a continuation pattern, where's the next area for it to move to? I would have to say it would be the 0.618 retracement of the move from the swing point high on December 27th. That was 100.75 down to low at $91.24. That was on January 9th out there. And most candlesticks, those that you pay attention to, the reversals. Well, first of all, most candlesticks, quite frankly, don't have a whole lot of meaning. They just have cool names and so forth, but they're not really to be used for trading out there because they really don't identify much of a reversal. But there are those, 5, 10, well, both on the bullish and the bearish side that you want to absolutely keep your eyes on out here. And then occasionally there is a continuation pattern, one of those being the rising 3 and the falling 3. And thus far, as we speak here right now today inside light sweet crude, you've got the rising 3 candle formation out there. Let's go check in on bonds. Let's go see what bonds are doing out here. James Bond, they are traveling out at a little doji formation, 131.13 out here. Potential A to B equals CD to the upside. Inside of bonds, you've got buyers have got control of the 30-year Treasury right now. The next stop up here, 131.24. So far, the interest session high has been 131.20, so very close to that move having completed. The question's going to be, are bonds forming the next A to B equals CD up pattern? That would take you up to about the 32-ish range. That would be your 0.786 retracement. That would form probably your next Gartley sell pattern. If we take a look at that, let's go draw that in on the screen out here. And that would be about your next Gartley sell pattern, your 0.786 Gartley sell pattern. And that would be in the 30-year Treasury. We've got to see what candle formation completes today out here. But so far, nothing bearish when we take a look at the daily chart for the 30-year Treasury. I did say let's go take a look at the FTSE over in the UK, so thank you for reminding me to do that. I know somebody was sending me that vibe out there. And if we take a look at it, this is the weekly chart for the FTSE. And what we can see here, which is important, was last week's close. And on Friday, that little bar right there closed above resistance. This is a resistance area that has been in place since the time frame of July 13, 2007. Let's make that black line on my screen a little bit thicker out here, make it a little bit easier for you to see if you are following us on the archive. Maybe you're watching us live on TigerTV or fortunate enough to watch us in HD inside of the Tiger's Den. That black line, you can see a number of horizontal lines going across my screen. Those horizontal lines, those are your primary trading range boundary lines. 68, 73, 51 happens to be the next primary trading range boundary line, give or take a few pennies. And if we can see the actual interest session high is 68, 67. 42, close enough for me. The level that we want to watch. Now, because of last week's close, that says that black line should now become, how about that? Let's use proper English out here. Should now become what? Support. Because it has been resistance. It's been significant resistance, and that level is at about 67.54, give or take. Now, the last swing point that it needs to take out, this is the FTSE, is the session right here from the week of May 24, 2013, 16, how about that? 68.75.62. 68.75.62. We see a close above that. Then what you're going to see here is a real breakout inside of the FTSE. Now, where is it likely to head to? That is a great question. Well, I would have to say, well, it's got one more area of resistance that I pull a little bit further back on the chart out here, and that goes back to 1999. It's high out here, 69.50. 0.60 out here. And, so that's the last area of resistance before, in essence, it has a consolidation breakout that looks a lot like the New York Stock Exchange. It's consolidation, so figure since 1999, we're in 2014, so you got a 15-year consolidation from about the 69.50 level down to the area of about 35.50. So what is that? 35, it's about, 30, 65... I don't know, 3,000 points or so. That's the kind of breakout that you're actually looking at inside of the FTSE, assuming that it can get over those 2009 highs out there. So that's what's going on with that stock chart. As long as we're taking a look at markets around the world, let's stop in and see what's going on over here inside of the Nikkei. Nikkei trading down a little bit on Monday. Sunday night, I should say, Sunday to Monday, up last night out here, and just really not giving us, in my opinion, not giving us a ton of information out here with regard to what its next move wants to be. Just really sideways move out here inside of the Nikkei. I don't see anything of significance here. If we take a look at the DAX out here, the DAX, you can take this chart all the way back to the rising price channel coming off of the 2011 area. You're trading in towards the top of that. Let's put this on a weekly chart, get a little bit of a perspective out here. This has completed, its consolidation pattern. Let's take a look at the consolidation pattern inside of the DAX out here. Let's just draw that in. It's going to be easier for me to do that. So this would be really the consolidation pattern. And if we take a look at where the DAX ought to, where its price projection ought to be, looks like I got to do a little squeezing here in order to move that up. Let's see if I can start it. My fingers were not nimble enough to grab it and go. There we go. I would say the DAX here says it wants to get up to about the 12,700 level in its longer-term consolidation pattern out here. Right now it's trading at 97.73. It is up and above its consolidation level out here. So no reason to think that over the long haul that is not where the prices inside of the DAX will, in fact, head to. And that is taking a look at a weekly chart for the DAX. Let's go see the Shanghai. Let's go see what the Shanghai is doing out here. Here is the daily chart. It still has this, however, non-confirmed little Gartley buy, 0.618 Gartley buy pattern. We did have that nice little bullish engulfing candle on January 14th, but no follow through for a couple of sessions. And all that we are doing is trading back into that level, which is at about the 2093 area. Right now it's trading at 2101. We've got the Dow up 28 points, S&P trading out at 1848. It's up 10 points.
A hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor's objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-05 or summary the possible loss of principal. Fund David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been here by 2000. Disrupt from TFNN to capitalize on these opportunities with great long-term prospects. David's experience is as an inventor, Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software with indicators enhanced the degree of Basil by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the HUI, and detailed coverage of nearly The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks, and the fight is on between the Bulls and the Bears out here, of course, as it is each and every day inside the markets. But what I mean by this is that if we take a look at the markets, we started off the show, we were really looking at the 30-minute charts when we took a look at the Dow futures, the NASDAQ futures, we took a look at the Euro, Japanese yen. We slightly peeked in on the ES Mini, on the S&P futures out here. And it's the NASDAQ futures that are the ones with the strength out here inside of the market. They have broken through that little consolidation level. Let's first go back, and let's take a look at the Dow. So the Dow here, we know, has been struggling. It's been struggling when it gets up to the top of this little consolidation pattern. And that's right at the downdraft that occurred on January 2nd. That's at the 16,495-ish range out there. Wasn't able to bust through it here. In fact, you can see as it approached that level, got up to a high here as we came into that 9:30 session, got up to 16,489. It's given it back pretty quickly out here as we take a look at the futures. So we can see that that level is an area of resistance, and it is backed off. So that's what's going on inside of the Dow futures. If we take a look at the Euro, this thing here has back a bullish breakout. It's also struggling in an area of resistance that it's not been able to break through here. It formed this little 1.272 butterfly up at about 1845. It did that on the trading session at 11:30 in the morning on January 15th out here as it got up to 1845.75 out there. We saw a little bit of a spike here during this last 30-minute session at 1844, but 1843.25 is a formidable area of resistance inside of the ES Mini. However, if it breaks through that area, comes back, tests it, and then it could be off to the races to the upside. But it's not the ES Mini where the strength is coming from. Everything here up against the resistance areas. The area that is the strongest in the market right now is the NASDAQ futures. Now, inside the NASDAQ futures, it's moving higher, and it's doing it on much less relative strength out here. And that's by taking a look at that 12:30 session here early this morning, up at the 3608.75 range. Right now, the intra-session high that we've seen here during this 30-minute session, 3612. So you've got a higher price, you've got less relative strength, but you don't have a reversal or anything. This, in fact, it's all about the markets are going to move higher. We know right now where it's going to come from. Likewise, if the markets fail, it's why we want to go ahead and keep an eye here on the NQ. In fact, right now as we speak here, it's backing off a bit. It's got another 3 minutes to just simply close back inside of the consolidation pattern to say, hey, I was just kidding you out there when it came to an actual breakout. But it's the NASDAQ that we will be paying attention to because all of the other indexes here, the other two, let's just say the other two, the Dow, let's say the other three, let's just take the currency pair, the Dow, and the ES Mini. They are running into resistance. So if the markets are going to move higher, it is going to occur because of the strength inside of the NASDAQ. Apple is up $6. Google was up earlier. It still is up. It's up $9.46. Priceline is up $11.74 out here inside of the marketplace. Biogen Bib, that's up $6. That's one of the top 10 weightings inside of the NDX 100. Folks, it is Terrific Tuesday. If you're off to start your day, be careful out there. Thanks so much for joining us. And I always want you to remember this, and that is that you do You've got an amazing power within yourself, and that power, it's so strong it'll create a life of abundance. It'll cure incurable diseases. It'll build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, and I do mean most of all, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Tuesday, folks. See you later.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.